$50,000, $70,000, $91,000, $117,000, $300,000. These are just some of the annual salaries that you would need to make to comfortably afford some of today's popular cars. In my videos, I break down how much you would need to make in order to comfortably afford some of today's most popular vehicles. And typically, the annual salary needed to make these expenses just 15% of your average income is even higher than the median household income in the United States. So in this video, I want to break down a video that was posted by another YouTuber named Nisha that is titled Accountant Explains How to Avoid Overpaying for a Car. But I want to go through and kind of see her perspective on how she suggests for you to avoid overpaying for a car, as like I said before, and as you see in a lot of my other videos, in today's car market, a lot of these vehicles are very expensive to maintain and keep at a comfortable percentage of your average annual salary.
Should I buy a used car or a new one? How many years old? How can I lower my insurance costs? What's the best way to calculate the total cost of ownership? Most of us are massively overpaying for our car.
With a lot of car manufacturers lowering their production lines and not producing as many vehicles ever since the pandemic, it is causing the price to rise and making these cars a lot more expensive than we're typically used to.
And so in this video, I thought it would be helpful to highlight 4 of the most important money things you need to know before buying, along with tips on how you can reduce the cost of having a car over the long run. The age-old question exists when it comes to buying a car. Should I buy new or should I buy used? On one hand, a new car comes with several benefits. Not only is it more shiny and nicer to drive, but it's also seen as more reliable and safer. Plus, they usually come with a warranty, and if you time it right, you can get a good discount on the car. For instance, March and September are busy car buying periods in the UK.
So for the United States, I would say that the best time to start searching for vehicles, depending on what model you're trying to get, would be right in the fall, because typically in October is when we see a lot of makers start to introduce new models. So by shopping in the early fall is when you can get some good deals on models that are about to be cycled out.
Downside, however, is that even after negotiating and timing this right, buying a new car is often still the less financially savvy option. And statistics show that after the first 12 months, a new car can depreciate by around 15 to 35%, and that depreciation keeps going up to 50% or more over 3 years.
And as she said, the depreciation of a brand new vehicle drops to an average of about 20% in the first year and then 40% in the first 5 years. And this is a very important factor that a lot of people look past, as it can very much influence your risk of being upside down in your loan, meaning that you owe more on the vehicle than it's actually worth.
On the other hand, buying a used car can save you a lot of money in the long run, and the sweet spot for used cars is usually between 3 to 5 years old. At that point, the car has depreciated substantially at someone else's expense and will depreciate slower in the years that you have it.
So understanding the depreciation of the car make and model and year that you are buying can greatly affect how it's going to turn out later on of you owning the vehicle, especially in terms of financing. And of course, just like with anything, there are some vehicles that will hold their value much longer, where you can buy an older model, but you just kind of have to understand which vehicles that is, make sure you're checking out the history of the vehicle and understanding which used models actually last that long, and if it's a smart move or not for you based on the vehicle you're actually looking at and the history that it's experienced. But for the majority of vehicles, I would definitely agree with her that you should aim for a used car that's about 3 to 5 years old. Going any further than that, you start to risk maintenance problems and bad driving history with the previous owners, and it can greatly affect how the car actually performs for you and what value it actually brings to you.
The downside, however, is that used cars may need more maintenance and repairs because it comes with wear and tear from previous owners. And this can really add up over time, but I'll come to some of my favorite tips on how to offset those costs later in the video.
Great. This is the part I want to see. Obviously, we're on the same page in agreement with a lot of these things. I think this is a great video so far. Let's look and see what she thinks about the tips on how to avoid overpaying for a car.
Number 2, factor in the all-in price. You could have 2 people buy the same car at the same time, but pay very different amounts for it, purely down to the way they bought the car. The most common ways to buy a new car in the UK is to buy it outright, hire a purchase or a bank loan, a lease, or a PCP. And depending on which one you choose, it can cost you thousands more or thousands less. To give you a high-level overview on what each of them are, the outright way involves paying the full price of the car on day one. So you don't have to worry about any payments or interest going forward. What you see when it comes to the car price itself is what you get.
And I see a lot of people in my comments mention that you should not buy a vehicle if you can't afford to pay for it outright. And while I do think that that is a great option, I do also understand that the majority of people, the majority of Americans, I'm not going to speak for the UK because I don't know all the statistics on there, but I do know that for the majority of Americans, it is very difficult to be able to save enough money to be able to afford to buy a car outright, especially considering that majority of cities in America, you do need to have a car in order to be able to go to work. And of course, there are a lot more work from home opportunities now, but with people going back to the office and going back to their jobs and needing a vehicle to be able to commute back and forth, they want to make sure that they have something reliable that they can have for multiple years to come. But like I said earlier, with the cost of vehicles rising and salaries not really moving, it is much harder for people to be able to save up enough money to just buy a car outright, and especially one that is reliable enough to do what they need it to do.
The second way is to buy a car through finance. And in the UK, if you're buying it through the car dealership, this is often referred to as hire purchase. And with this, you pay a deposit for the car or a lump sum at the start, and then you borrow the amount that's left at a set interest rate for a set number of years.
Okay, so aside from buying the vehicle outright, we have financing where you put your deposit down or $0 down, however you work that out and what you get approved for. And then you get approved for your specific financing terms, meaning how long you're going to finance the vehicle and what your annual percentage rate is, which is what determines the amount of interest that you're going to pay over the course of your financing terms. So typically you would finance either through the car dealership that you're getting the vehicle, or sometimes people like to go to their bank specifically and get approved for a loan ahead of time through their financial institution of choice.
Third option is leasing a car. This is similar to renting. You make monthly payments to use the car and then you return it at the end of your contract. With this option, you're only paying for the car's depreciation during the time that you have it, not its full value.
The next option would be leasing, which is also a very popular option and tends to be a little bit cheaper over the first few years. The average length of time that people lease a vehicle is usually about 36 months or 3 years, where you usually make the payments for the amount of time that you have the vehicle, and it only factors in the interest rate over the time that you have the vehicle. If you drive far distances, this does have some downsides if you don't plan to purchase the vehicle at the end of your lease, because there's typically a max amount of miles you can drive per year in the amount of time that you're leasing the vehicle. And I do get quite a bit of comments of people requesting for me to do a video on the difference between leasing versus financing, and I'll make a video in the future that explains the breakdown and makes the comparison between the two so you can see which one is a better option for you personally. But let's get back to the video.
The total cost depends on which of these financing options you choose, the length of the contract, the amount of your deposit, and which car dealership you go for. The price can vary between car dealerships because some of them can offer greater discounts or contributions than other, so it's worth shopping around. Third thing to consider is insurance costs. Insurance costs are often ignored when we're budgeting for a car. You go through the whole car buying process, you decide what car you're buying, and then you look at the insurance cost and you think, didn't budget for that.
So, if you watch any of my other videos, you know that I account for insurance, gas, and maintenance. So if there's any vehicles that you want to know more about and what salary you would need to make in order to comfortably afford them, including an average on all the costs that you would pay, let me know down below which cars you'd like to see, and check out some of my other videos where I do breakdowns on some of the most popular vehicles.
The good news is that you can get some good deals depending on your driving history, the car you're buying, where you live, and what insurance provider you're going for.
Correct. And like I say in every video, the numbers that I use are very much an average and are very subject to change based on your age, the state that you live in, and your driving history, as well as a multitude of other factors, including the color of your car, the amount of miles it has, the year that it is, your credit score, and multiple other factors can all greatly affect the cost of your insurance.
And the fourth thing to look out for is maintenance and repairs. The average used car driver spends around £1,300 annually on car repairs and maintenance. This number includes petrol, repairs, and breakdowns. 2 tips to keep the repair costs low. Firstly, know that you have other options beyond just going to a car dealership when it comes to maintenance. The second option you could do, which is becoming more and more popular, is the do-it-yourself option, because you can find the answer to anything on Google. I'm not going to recommend this because I would be hopeless, but if you prefer to watch a YouTube video on how to fix something or how to change the oil in your car, you can save money or it'll cost you more depending on your DIY capabilities. Those are 4 common things to look for and consider when buying and running your car. Thank you for watching and see you in one of them.
And in terms of maintenance, I would definitely agree with her on making sure that you look around and get the best quotes and figure out what the best options are in order to make sure that you take care of any issues that arise, as well as oil changes, and always look for the best deal on getting an oil change if you're not already opting to do it yourself. And in terms of gas also, be aware that certain gas stations do offer much lower prices rather than just going to the first one that you see or to the closest one to you. And if you're looking to save a little bit of money on gas, or in this particular situation, I guess get some cash back, if you haven't already, check out the app Upside. It is an app that I use personally to help save me money on gas. And if you use my code when you sign up for the app, then you can save an additional 15 cents per gallon the first time you use the app. And I very much agree with the tips that she gave in this video. And if you haven't already, check out her channel and subscribe to her as well. She makes some really great financial content, and you can definitely benefit from watching her videos. And like always, if you like this video, please like and subscribe. Thanks for watching.